Hi, Mark Anderson here, mortgage banker with Paramount Bank. I'm licensed to lend in all 50 states, and I would love the opportunity to earn your business. I wanted to thank everyone who has reached out to me over the last couple months. Since starting this video series, I'm up to over 20 clients that have trusted me to handle their mortgage, and they met me through doing these videos. I never expected that response, and I sincerely appreciate anybody who's trusting me to handle their mortgage transaction. And for anybody that's reached out to me just to talk or ask questions, I'm happy to do it really anytime. You can reach me at the number below, either by phone or text. For today's mortgage rate update, the story this week has been a little interesting. Friday of last week, pricing was very good. I'm going to say that we were, let's say, 0.75 to one step above the lowest rates that we've seen over the last 60 days. Monday, the picture got, let's say, marginally worse. In the beginning of the day, the bond prices were pretty healthy here at about this 103.4. On the left-hand side, this is the bond performance yesterday on this 30-year 2.5% coupon. The bond prices got worse toward the end of the day, and we did see some pricing get continually worse just by a hair by the end of the day. It was still a very favorably priced day. I'd say we were solidly at one step above the lowest rates to maybe 1.25 steps above the lowest rates. I'm making this step chart way too complicated. Today, we started pricing actually marginally worse than yesterday, even though the bond market opened better than where we closed at the previous day. By about this point in the day here, I actually had a conversation with a client where I said, look, the bond prices are up right now, but for some reason the mortgage rates haven't moved at all. And this reinforces my general argument that I've made through a lot of these videos that the mortgage investors that are setting rates, the bonds are really only one factor that drives their decision making in terms of their rate sheets. There are, in fact, other factors going on right now. Concern over capacity. Anytime the rates get super low, one of the reasons why the window is open for such a brief period of time is that the lenders get full of locks and they begin to adjust their margins up. And then that low rate window ends up being adjusted to slightly higher rates. So that's one element. You've also got the element of lenders are, let's say, storing some nuts away for winter. And winter in this case is the potential default risk associated with the massive unemployment numbers that have come out, how this virus is impacting the economy over the entire United States. They have significant risk. And so on new mortgage transactions, the margins, I would say it's inarguable that the margins are at the highest levels that they've been, I think, in my career versus where the bond prices actually are. Because again, I'll go out here to this 3-month view. And I've made this point several points, but it certainly bears repeating. Right here in early March, this is when the bond price on this coupon was at 102.61. And this is when the rates got to their lowest levels. They have not really fallen below the levels that they reached right here in early March, despite the fact that we've seen bond prices significantly higher than that level throughout this entire period of time here. Now, there's been an incredible amount of volatility in this window of the past couple months, but for the entire time, the bond prices themselves are much higher than they were over here. And that is, it lends some credence to my argument that there's other factors other than just the bonds driving the day-to-day rate decisions. There's also these other factors that drive the day-to-day rate changes. So for today, we saw, like I said, marginally worse pricing. I think, I talked to a couple people who maybe the discount points on their transaction, maybe they were already buying discount points. The discount points got worse by a few $100s depending on the loan amount. Surprisingly, it was a little bit worse today. Bonds were shooting up throughout the day. And really, I didn't see much in the way of any lender clamoring to make their rate sheet better. A couple lenders on my sheet did improve their pricing, but they were lenders that already weren't at the top of the list. They weren't the most competitive investors to begin with. So any improvements that they made were just getting closer to the most competitive pricing that I already had access to. But long story short, here's where we're at. I talked to a client earlier today, took the application. My advice based on where we're at right about here was to go ahead and lock the rate because I did not see any rush to make the pricing better based on the bond price improvements for the day. And it seemed like the smart thing to do, given that we're really just one step above the lowest rates that we've seen over the last 60 days. However, I actually just called him a few minutes ago and suggested, based on the fact that we're now at levels that are higher than where we started the day on Monday, I think there's a reasonable chance, let's call it 70%. There's a reasonable chance that pricing could be not majorly better tomorrow, but a little bit better. And I didn't feel comfortable putting in that lock request knowing that there's the potential for the rates to get slightly better just by tomorrow morning. I asked him if he was willing to take a little bit of a gamble on that, because in this market, it's always a gamble when you wait. But he was open to that, and we're going to take a look at it tomorrow morning. I'll be very interested to see what the market does tomorrow, and I'll, of course, be shooting another video to keep everybody up to date on what's going on. So thank you very much for watching the video. Please like the video, please subscribe to the channel, and please share my content with anybody that you think may be interested in keeping up on what's going on in the mortgage rate environment. Again, you can call or text me at the number below anytime.